Hi, my name is Alan from Alan Ray Property. Welcome back to my YouTube channel. Today, I'm going to talk about what is mortgage insurance and why you should seriously consider it as the best Christmas present for your family. Firstly, we are going to discuss what is the difference between a home and mortgage insurance. Secondly, what is the similarity and difference between a mortgage and term insurance. Lastly, I'm going to share a real case heartbreaking story about a family having to sell their matrimonial home because they did not have a mortgage insurance. Let us dive straight into it. For many of us, when we buy a property, we are not just thinking of ourselves. We also have to think of our family. But one common worry of any homeowners with a mortgage is what will happen if we pass away. If you are unable to make your loan repayment, you will either have to sell the house or the bank will seize it and auction it off to recover the loan, leaving your family without a home. When you die with an outstanding loan, your loan will still need to be paid off by your dependent. So please take note of that. However, if you have bought mortgage insurance, your family will enjoy financial coverage for the outstanding housing loan you own. The insurance company will make a lump sum payout that could be used to repay the outstanding loan amount if you have passed away or you suffer a total and permanent disability or terminal illness. Some of you here may be confused with home and mortgage insurance. Alan, I already have a home insurance. Why are you still asking me to buy? Home insurance, or commonly known as fire insurance, provide coverage when something happens to your property and the content within it, such as your furniture and personal belongings, in an event of a fire, flood, theft, or burst pipe. Mortgage insurance, on the other hand, provide coverage if something happened to you so that your family can continue paying off your home loan. The lump sum provided by mortgage insurance can be used to offset your housing loan and prevent the risk of the banks repossessing your property. Here, if you own a HDB flat and are using your CPF to pay for your home loan installments, CPF board will by default require you to be enrolled in the Home Protection Scheme. The Home Protection Scheme, or HPS, is a mortgage reducing insurance that protects you and your loved ones from losing your HDB flat in the event of death, terminal illness, or TPD. HPS insure member up to age 65 or until the housing loan are paid up, whichever is earlier. If you own a private property, you will not have any sort of mortgage insurance by default. The insurance policy mandatory by the bank is usually for fire or home insurance, so please do not get confused with it. To protect yourself and your family, you will have to either purchase mortgage insurance from a private insurance company or find a term insurance policy with sufficient coverage to settle your home loan. This comes back to my question on what is the similarity and difference between mortgage insurance and term insurance. Both mortgage and term insurance would pay out a lump sum that could be used to repay the outstanding loan amount in the event of any unfortunate event befell you, ensuring that your family will continue to have a roof over their heads in case of unexpected events. Mortgage insurance is a mortgage reducing insurance. Assuming your housing loan on the onset is $1 million, your premium at the start of the policy can be higher, but as your loan is reduced over the years, your premium payable will be gradually reduced too. Whereas term insurance has a fixed premium over the duration of the policy, your premium remains the same as per the lump sum payout of your policy. Term insurance is often used as a mortgage insurance too. Assuming you start off buying a smaller property and have a housing loan of say $500,000, you can secure a $1 million term insurance first. In any unforeseen event, the term insurance can be redeemed to cover the $500,000 housing loan, and your dependent will receive $500,000 in cash. Subsequently, when you plan to upgrade to a bigger property with a higher loan, you can continue to pay for this $1 million term insurance as long you need the coverage. A bonus tips here: if you have plans to secure any term insurance, please do so early as your yearly premium will be lower when you are younger. Let me share with you one example for the single male who is a non-smoker taking a 1 million term insurance at 30 years old. His yearly premium will be $923 throughout the duration of his policy. However, if he starts at 40 years old, his yearly premium will be $1,400 for the remaining duration of his policy. A few years ago, I have a client whom I helped to sell off their private property. The property is jointly owned by both the husband and wife under joint tenancy. The husband is the main breadwinner, while the wife's income is more of a supporting role. They have 2 young children staying with them. When the husband passed on suddenly, the wife could not finance the loan with her sole income. The wife assumed that she will own half share of her late husband's property, since it is under joint tenancy. I have to explain to her that it is indeed true that she owned the other half share, but since there is an outstanding loan to the property, she technically also owned the debt of her husband's share, since they did not have a mortgage insurance. The husband has some life insurance, but that is not enough to repay the outstanding loan. The wife has to sell off their matrimonial property and move to a HDB flat instead. Can you imagine how stressful the family is having to sell off their family home at an already heartbreaking time? At the end of the day, we can't control everything, but we can stay prepared for unexpected life events. Securing your family home represents your love for them. Having a lump sum to help with the mortgage can be a great comfort to our loved ones during difficult times. I know some people will tell me this, Alan, I'm very heng one. I don't need mortgage insurance, and neither will I go so soon. I mean, really? When you go to heaven, please remember to ask your God why He asked you to report so early. There is a Chinese saying, 人算不如天算. It's always good to be prepared. Don't play. Here, if you have plans to buy a mortgage or term insurance, you can contact my own insurance agent, whom I highly recommend, being sincere and patient. She is from Income. I bought most of my insurance policy through her. Her contact details are in the description below. By the way, this video is neither sponsored by Income or by her. The best present this Christmas you can give to your loved ones is not any fanciful present, but rather a peace of mind that their home will be protected in your demise. That's all for today. I hope you enjoyed this video. As usual, please help me click on the like and subscribe button if you have not done so. Thank you and stay safe during this festive season.